And so we're really excited to be carrying this forward and seeing what we can do and discuss fintech across the continent. Now, let me tell you how I met John. So John and I met in 2018 in Togo, out of any random country in the world. We met in Togo because of an EcoBank FinTech challenge. And we were both finalists there. So they flew us out from Lagos and from Dar es Salaam to Togo. And that's where we met and started hanging out. And when we were both in Togo, we discussed, we're like, hey, are you applying to Y-Combinator? Yeah, you're applying to Y-Combinator too. And so we're both like chatting about our applications together. And little did we know that we were both interviewing similar days in YC. And then we both got into the same cohort in Y-Combinator for the winter 2019 class. So got to spend quite a bit of time there with John and get to know him. So John, you started your first company at the age of 16. You know, we both operate in Africa. I'm in Tanzania, you're in Nigeria. And is it like, you know, one big question I have for you, you know, a lot of the times that many people who even might be watching this, when people look at younger people, they're not taken as seriously. Sometimes people, you know, see you as a young founder. How did you tackle this? How did you get over this?
I think we made money in Nigeria. Like the first time we made yeah, I think that was the first time people started paying attention. We just like, we saw some traction. And that really like made some extent banks sit up and say, oh, these guys are listening to then traction. So I think traction helps.
And so traction helps people like, okay, start paying attention to you a lot more. And you know, when you started that company, that the fact that you were able to make that, that's what people would listen.
Yeah, they would.
So now, John, like you started working on wallets, right? Tell me about this journey. Tell me about why you started building wallets. It's a bold move to, you know, I know you're working at Wema and a lot, and you built a digital bank there. You helped this organization build one, and you decided to quit your job there to start building wallets on your own, like from the beginning, basically from scratch. Can you first, for people who don't know, tell us in like one sentence what wallets is today, and tell us about that journey about starting to build wallets.
Right. That's a good question as well. So today, Wallet is an online bank for businesses majorly to perform electronic transactions across the continent. But that was not how we started. In fact, we started because I wanted to watch Netflix and I couldn't. You see, I was this fancy financial engineer, had done all this product, and yet I wasn't able to solve a simple problem of paying online in Nigeria. So then the idea was simple: build a very small mobile wallet, very similar to M-Pesa. Then I bought one of my friends, GB, issue a card with that wallet. So it's like M-Pesa with a card, right? And that was how we started.
Oh, interesting.
Yeah. Then all of a sudden, no, go ahead. Do you have a question for me, Benji?
So essentially, like somebody can store money and you're also issuing them a card. So this is like a virtual card where they can pay for online payments. Is that correct?
Exactly. So it wasn't like a Naira physical card that people already have. You know, there was no USP there. So it started out as just a virtual card for, you know, consumers to be able to like do stuff on the internet. Then, you know, over time, Facebook, the very interesting perspective I saw then, I saw a surge in transactions. People wanted to pay for Facebook a lot. And I started looking at who are these people? They turned out to be mobile money agents, people where people do like transfer services. So they were paying Facebook with our dollar cards to do localized cards. So I started speaking to them and asked them, what other feature would you like? You know, the typical YC way, what else would you like to see on this product? So they said money transfer, they said bills paid, they said airtime purchase, and layered all of that on top of the product in like 2018. And then that was when we met, Benji. We went to Togo, we said, then we went to the US, and you know how great those office hours were. So when we were at YC, you know, the interesting question they asked me was, how does this become $1 billion company? And I said, if we're going to be in consumer, we'd have to spend $1 billion to make $1 billion. But if we try to look at, if we try to look at businesses, that looks like a niche area, and that looks like somewhere that, you know, with businesses, the more they grow, growth, the more your business also grows. So it was like an honest to God conversation with Michael Seibel that day, that look, this is what we should be doing right now. So it was like, okay, that's cool. That's cool. That's all right. You try to do that. And coincidentally, this was a pure coincidence, Benji, because you'd remember that there were few Nigerian founders that were with us then, so they were using our product to pay for Airbnb. They were using our product to pay for, they were it's like, oh, we should be solving for these guys, these startup founders, these companies. And then also like lots of these competitors came into the consumer market, made it like a bit interesting. So we were still competing there, but we decided to focus on them. And the first customers were those startups that were using us at YC, CaroWise, the Schoolable, the Private Greek, all these really smart. So that's how the journey came, started.
So the product's grown since, right? You've grown your user base, you've grown your transaction volume. By the way, what most people don't know is John is actually like, his volumes are way better than a lot of different fintech companies in Nigeria. John is one of the type of guys who just keeps quiet, builds, and executes. And that's one of the characteristics I really admire about John. He doesn't like to say much, but I'll speak up for him on this one. John, a big question that many people want to know, and some of the people who are even listening in and tuning in right now want to know about Y-Combinator. There's been just about 40 companies from the African continent in total that have been to Y-Combinator. You're one of the many from Nigeria who hold that badge. So YC is Y-Combinator. For those who don't know, Y-Combinator is a accelerator that a lot of different people around the world can apply to. And essentially do is they give you $150,000 or $120,000 now, and they help you accelerate and grow. And at the end, you go and stand on this stage in front of 1,000 investors plus, and you give a pitch about your product. So John, let's talk about that journey there. There's people right now who are listening who are interviewing for Y-Combinator. What do you think made it special for you to get such a prestigious venture capital firm involved in your business?
Right. So I think the first part was there was a strong signal, similar to what you've done for Benji now. For Tanzania now, Benji. There was a strong signal from Nigeria. Shola, GB, Yinka, these really smart guys had gone to YC and they had done really well. So
hey, John, people in the audience don't know their company. So Shola, Paystack.
Okay, Shola, Paystack, GB, Flutterwave, Yinka, Kudi, these really smart founders had worked and they had gone through YC. So there was signal that really, really helped us. Then I think we had really strong traction, right? We had really strong traction. And to some extent, I think some of my own background might have affected, the interview as well, but I'm not sure. I think we had there was a strong signal of fintech in Nigeria. And the traction we had then, we're growing really fast in 2018. And to some extent, the conversations we've had that I had with the partners about my background, I think might have helped. Then also the batch was really just, they were really open to listening. They really wanted to hear us then. If you remember our session with them. So I think those things really helped, in us getting in there.
Right. And John, just one piece I just want to understand better. So it sounds like, all right, everything was so smooth sailing. It was super easy. You started out, it was just like, you quit your job and it was all smooth sailing. All of a sudden you started this company, you're brushing dirt off your shoulders to get into Y-Combinator. Was it that easy? I know a lot of people see you, they look at you guys as a success story in Nigeria so far. And tell me about the hardships. Tell me about the things you've struggled with. Tell me about the challenge that you faced. Tell me about the things that have kept you up at night. Let's talk a little bit more about those challenges.
Right. Well, that's also a good question. So if I've given people the impression that this is really easy, I'm sorry. It's not. This is probably the hardest thing you can do with your time in your 20s. So there's that. But the challenges, I just saw all of them as opportunities for growth. There was one very interesting one that comes to mind. So the first month, I left my job. I put all my savings together in this account. So I was using my own personal money as some sort of float. for people's transactions in our first month of launch.
Mm-hmm.
So this was one of the first transactions we had. There was this guy, you know, he was like, dude, I love your product. I've been waiting for this for such a long time. But the challenge is I have an international card. So I told him, we can do that for you. And I'd figured out this really interesting technology that GB and E and the guys had built at Flutterwave. So I said, we can help you charge your card. So it was like, yeah, that's fine. The thing about international cards is you don't get to get settled in the following day. And we're doing like instant settlements for the guy. So the guy like whipped my entire savings with like 4 transactions. So I thought I had about, 12 months of runway. Then I had 0 all of a sudden.
Oh, wait. So this somebody played you and like just took all the money.
So it wasn't like the following day when I got chargeback emails that I was like, whoa, what's going on? So you're going to have like similar experiences like that. We learned from that. We realized that, in order to like do international transactions, there's risk involved. I think we also just persevered. My founding team, I don't talk about them as much, but I think they really, really just persevered. They really, really persevered. And it was what we did was really hard, then. I mean, now, like when you talk to banks, they are ready to give you APIs to do whatever you want. But in 2016, 2017, nobody wants to give you any API to do anything you want. So we had those kind of challenges, fraud, technology challenges, team challenges. There were a couple of things, but we just felt, and I think this is what kind of keeps driving founders like yourself as well. We just said there is a version of the world where products like wallets, where products like Nala exists, and that's what we are fighting for, right? So that's why we really wake up every day to go to work.
Right, and John, like you put your own money there, and somebody like stole your money from you at a company. Those are hard experiences, right? And those are things that many people don't see or read about anywhere. They maybe might read you on, TechCrunch or any of these tech publications and think, oh yeah, wallets out here killing it. But what they didn't really know is that probably emptied your bank account at the time, and you had to start building again. It was an expensive lesson learned, right? So let's talk about the difficulties in scaling in Africa. So many people say scaling in Africa is hard. You've launched wallets in Nigeria. You do payouts in Ghana. You do payouts in Kenya. Could you tell us the key ingredients in making this successful and what you look for when breaking into new markets?
So I'm not sure I've had a lot of success there yet. So jury's still out on that. But the first thing I look out for with new markets is what's the synergy with the current market. Right. So like when we went to Ghana, we saw there was a lot of our customers that wanted to send money to their family in Ghana. There were lots of our customers that wanted to send money to their business partners in Ghana. Lots of people at, to some extent, children in school. So they were all cousin or family in school. So there was that synergy. Then for Kenya is the second most visited country. Like Nigeria is the largest arriving country rather at Kenyan airports. So, there was all this data that was just like there to like look at, okay, so this is what I should have been doing. Then also I had like to some extent, I also look out for like, what's my local network there? Like one of my investors are very strong in Ghana. In Kenya, I work like, gift cards to like M-Pesa TOs. So we did like, there's this like local network to some extent that existed in those markets that I could just tap into if I wanted. So those are the things that I look out for. Synergies with my current market, that's where I'm positioning them. What's my local network there like? Because, we work in financial services, something that's very regulated. So you just need someone like to some extent looking out for you there. Then, there's also like just talking to users, what the users want. Like, are there users in those places that think your product is useful for them? Are there users in those places that would want to do the same thing that your users do in your country there?
So the big 3 takeaways that I got there was, looking at data and what the patterns were showing. looking at your network and what that created for you, where you're stronger, and what the customers are saying. So those are three key elements before expanding to a new market. Ladies and gentlemen, for those tuning in right now, we've got John from Wallets and Wallets Africa on the call here today. And if you have any questions as well, feel free to drop them in the chat. We'll be going through those in maybe 10 minutes or so from over here. So John, let's talk about the growth pieces in Nigeria. So I saw a tweet from you, I think yesterday or today, where you said in next year there'll be 25 digital banks in Nigeria. Could you unpack that a little bit? What do you mean by that, and why Nigeria specifically? What patterns are you seeing growing in the market? Do you think there is space for 25 digital banks? Do you think a lot of them will need to evolve into different types of businesses?
Yeah, so that's the way I think about it. Building a digital bank in 2016 was hard. 2015 it was really hard. You needed to have regulatory cover. You needed to be able to integrate with all these SOAP APIs. You needed to figure out a way to take deposits electronically. Then now there's work being done by Flutterwave, right? For you to be able to receive deposits with cards. There's work being done by wallets for you to be able to create digital wallets for your customers. There's work being done by Paystack for you to be able to create virtual accounts and things like that. So if you get really smart engineers together in a room in a month, you could probably whip up a digital bank. So far as you get a really solid bank to back you to provide banking services on the call, or you try to apply for your own license. So it's much easier now for people to do that. And what you're going to see happening is there are so many sectors that have been so because of the way the value chain is set up, there are so many sectors that will have benefited from a more intimate banking experience, very similar to what you guys have in the US, where there's community banks just for stuff like this. Then there's security houses and things like that. So you're going to see more of those digitally. You're going to see people building digital bank for farmers. You're going to see people building digital bank for musicians. You're going to see people building digital bank for stuff and that's the next phase. And you're probably going to see someone like Uber. The Uber wallets already out. So you're probably going to see them also try to be a digital bank for their drivers, and Spotify, a digital bank for the artists. You're going to see those kind of things and try to roll out.
So you're saying, you're giving a lot of credit to. So I think you talked about a very important point. I think two things are really important there. One was the infrastructural piece, given how you have all these large players that have set up infrastructure that enables young startups or people who love technology to go and build on top. So there's an enabling environment that Nigeria has built extremely well, which is also an opportunity in many other African countries around the continent. I would add to that. And then the second piece is this whole idea of vertical banking, right? So how in the States, if you earn all your money from Spotify, maybe Spotify should be your bank account. If you're using a certain agricultural service, that agricultural service that's connected to a financial service should be your bank account. So that's, I think, a unique place that we will, I personally totally agree with you on that one, because I do think that will evolve over time. So let's talk about, I think today you launched a new product, right? At Wallets, or what was it? What would you guys roll out today? And also, I know a lot of people in the audience today are also customers of Wallets Africa. So there's business customers, there's also consumer customers. Could you tell a little bit more about what offerings are available to business people for business customers and consumer customers right now?
Right. So remember I mentioned that we started out as a digital bank, a neobank for consumers when we started out this digital company. So that business has still been growing. It's been growing. We have about 60,000 of consumers now, and we now went into the business side, and now we have about 4,000 businesses. And there was this opportunity for us to build this peer-to-peer network for consumers to directly pay businesses, because it's within the same ecosystem. So it's consolidation. So now businesses can receive money. A coffee shop can receive money from our mobile app from our customers. So that's what we released. An easy way for consumers to pay businesses. Always work, 100% success rate, way cheaper, no fees.
Wow. Okay. So I mean, if anybody here right now, I'm just going to give a quick plug for John. Tell us how it is. You know, John, you saw the Paystack acquisition. They had 60,000 merchants and got sold for 200 million. John's getting there, y'all. John has 4,000 businesses signed up. So watch
Yeah,
this
well,
space. uh, watch this space. One thing I'll add for I'll say for John here because he won't say it. But during YC, he was one of the companies that were one of the most sought out after companies during the batch right after when people were finished fundraising. When we started fundraising after demo day, and so those of you who didn't get into the round, you know, I'm like sorry about that. But John, is there an opportunity coming soon for people who are interested in getting around? Is there going to be a new round anytime soon? And what does that look like if somebody on the call might be a potential investor for your business?
right. I mean, most of my investors, I met them over email, most of them from code intros from my friends like yourself.
Mm,
So yeah, always just reach out via email, DM. As soon as the round becomes open, reach out to everybody with like, how it's going to go.
yeah.
So really,
They should
really,
try to get in early because I know the
yeah,
last round, a lot of people were disappointed they couldn't jump in. So if you are listening and interested in what John's working on, just try, connect with him after this call. John, we're going to jump into quick fire. We're going to jump into questions for the public here very soon. I have a question for you though. Across the African continent, you've seen multiple businesses evolve, especially in the fintech space. What do you think are 2 or 3 patterns you see growing more over the next 3 to 4 years?
I think people are really, really sleeping on crypto. I
Mm,
think I think people are really sleeping on crypto and the power it has. So I see
mhm,
something really interesting happening there. Someone figuring it out. Then I
mm,
think I am very big on like prop tech
mhm,
because I think that's a huge problem. There's a lot of Africans today who don't have housing, or there's a lot of middle class to some extent Africans who can afford housing, so they have to rent. So you're probably going to see more companies move into like prop tech, try to offer like mortgage-like solutions, like and
mhm,
things like that, like really
mhm,
easy renting, very similar to like
mhm,
um, yeah. So you're going to see stuff happening in prop tech. There's a couple of interesting companies in Nigeria doing that. So
mhm,
really interested to see what happens in that space. Then you're going to like see a lot more companies because I speak to founders. I engage with like founders on Twitter, but I also engage with like engineers and like product people and just like people who work at startups generally. And
right.
they're learning so fast. Like, and it's so easy for people to start companies now. So you're going to see more of those people just like go out and start startups to solve problems that they have in their daily lives. And because of how I was reading something the other day, and by 2023, 84% of Nigerians will have been connected to the internet. So because of how fast
Wow.
things are growing, yeah. So because of how fast things are growing in Africa, right, you're going to see like a ready market to some extent. All you just need is like some credit products in there to make things easy for people to like take risks. And once that's starting to happen, you're going to see more people take risks and start companies. And when they start companies, not all of them will succeed, but the net value of the ones that succeed kind of outweigh, the net value of, the ones that don't, succeed. So what you're going to see essentially is this sort of economic implosion on the continent as a result of the
Mhm,
success of like some of the startups. You're going to see like some of, the earlier startups funded become more mature. You're going to see them consolidate. You're going to see like CEOs move companies. You're going to see like things go around the place. And that ecosystem where in 2011, when you were telling people 2012 that, oh, Africa rising, it's actually going to rise. It's actually a thing now.
right.
So yeah, you're going to see more founders. Like you're going to see more fintech products as well. Actually, fintech is an ongoing thing. Then you're going to, mortgage, crypto. Yeah, people are really like sleeping on crypto. Crypto is going to be big
Mm.
too.
Talk about that a little bit more. Some people who might be listening here might be huge crypto, what do you call it, enthusiasts, advocates. Can you share what do you mean by people are sleeping on crypto?
Right. So like Bitcoin. So I'll just start with my favorite coin, like Bitcoin. So Bitcoin is like
Mm,
it's a symbol to me of economic freedom. right? So don't forget how this whole thing started for me at wallets, right? So it started for me not being able to use my Nigerian card to pay on the internet. And there's a reason for that. The reason why you can't use your Naira card, that's your Nigerian Naira denominated card, is because your bank won't provide the USD required to sponsor cross-border transactions, which means the internet runs entirely right now on, some strong currencies, the USD, GBP, AUD, etc.
Right.
So Bitcoin is saying this currency doesn't care where you're from, who your banker is, your race, kind of passport you're holding. As long as you have Bitcoin, any network that accepts me, you'll be able to pay. Right? So that now changes the kind of risks that people can take, right? Because you know that your card is not going to be declined. To some extent, we solved that for you. But there are also some places that you want to send money to. Most interesting use case of Bitcoin that I see is people using Bitcoin to pay merchants in China, pay merchants in top. Like these are places that if you go to your bank to say you want to pay in, there's going to be like, oh, there's no dollars. You need to go buy your own dollars, etc. So cross-border transactions in general is broken, right? The cross-border infrastructure on the continent, to some extent anywhere in the world, because I still try to wire from the US, it's broken. And crypto provides a very easy way, a very easy solution for that, right? Now, there's concerns about the volatility of these coins. There's a concern about the safety, like a huge lot of Bitcoins are, sorry, a huge lot of Bitcoin is missing today.
Right.
But we can also say that for electricity when it started. You can say that for the internet when it started. You can say that for the ATMs when it started. In fact, I was so young, but I remember this. Cards had a 50% success rate when they started in Nigeria at ATMs. Like in 2005, if you go to an ATM to try to withdraw money, 5 times out of 10, you're going to get bounced. That was
wow.
So technology at its early, in its early days, it's never perfect, right? There's always flaws, etc. But Bitcoin is this, to some extent, that's where the original idea of wallets came from, is this currency that is programmable, it's flexible, you can do whatever you want on it, you can build on top of it. Ethereum was built on top of it. You can build interesting things on top of the paperwork. So I see a future where companies, and this is something we are actually actively working on at wallets as well, where companies make it more UX friendly for people. Once people are able to do more things with it, it's going to be interesting.
Yeah. Cool. Awesome. Thanks, John. For those who are just tuning in right now, feel free to drop in your questions in the Q&A section. Also, don't forget to tweet with the hashtag BuildOurAfrica, and feel free to, we'll be picking up questions from Twitter as well. John, I have a question for you. In a recent interview, I heard you talking about opportunities and the importance of mentorship. Can you talk a little bit more about how has mentorship played a role in your career, in your success today to where you are? And what traits do you think are really important to look for in a mentor?
Right. I mean, so there's 2 types of mentors, right? There's mentors that people that you can just send an email or ask for a meeting.
I know what you mean with this one. And the second one is
there's people you don't know, right?
Exactly.
I
watched their YouTube video. They're mentoring me. Yeah.
So there's those folks, right?
Yeah.
What I look for in a mentor, there's something really interesting that I read somewhere. It's when you're about to ask for advice from someone, you kind of ask, would they rather be you or would you rather be them? Right. Ooh. So I feel to some extent we have so we have some mental model that we are all working with, right? There's things we strongly believe in, hold on dearly to. So it's there's probably a mental image of where you're trying to be in the next 20 years. And there's, to some extent, you're not the first person to think of that thought. You're not the first person to try to act on it. So there are people who are there already. So one way I try to do it is seek them out.
Okay.
I consume, one of my mentors is PG program. I've consumed probably all the essays there.
Wait.
My
Paul Graham from Y-Combinator, right?
yeah.
Hey, for those listening, if you're trying to
Connected.
get connected to PG, like hit John up, ask him for the connection,
No,
African
I
American.
don't know PG particularly.
Yo, levels, man. Like, I see you. All right, you're going on Michael Sebo's, who you said next.
Yeah, I mean, Michael Sibel's really smart. Sold this company for $1 billion to Amazon. You know how hard he drilled us during our, YC days.
Right.
Then, so like, essentially, it's like, who are the people that doing the things that you want to do,
Right.
and how do you meet them, or how do you like consume their content? You might be disappointed sometimes when you meet your heroes. You always have to keep that in mind as well.
That is true. I mean, Drake. What's the song? Drake's song says, when you meet your idol, it's like seeing how magic works. So I could totally see that. Sorry to cut you off. Go ahead. Uh-huh.
Yeah, but it's just so important, having all these people. I have a lot of them in Nigeria, like bank CEOs or folks that you just like reach out to when you're like, yo, I don't know what's going on here. And they're like, you'd be surprised at how helpful these guys are, where you just like talk to them. So it's mostly about looking at people who are where you want to be and just like reaching out, seeking them out, or like consuming the content. That's what I think helps.
That's powerful. I like that. Mentorship is looking out for people who are where you want to be. I love that. John, we're going to jump into some Q&A here. For those who are also tuning in, feel free to post on Twitter, post in the channel, and we'll pull some questions from there. So first question I have here is, what is the biggest mistake you have made? Let's do it as it pertains to wallets. And, mistakes, opportunities for learning. So let's look at it with that perspective for sure.
Right. So I think the first I've made a few at wallets. Wow. Okay. But I think one of the ones that really ring loud to me was we hired like our friends. Yeah. So it was really hard to hold them accountable initially because, you'd be scared like you're going to lose the friendship, etc. So that cost us actually. So we had to do the hard thing eventually. So that was a big mistake. That was terrible. Then of course, my own personal experience where we didn't do, enough, like where we just trusted the customer too much. But, we've come across like a few mistakes here and there. We've made mistakes, a lot of mistakes hiring people. We've made a lot of mistakes waiting too long to let go of people. We've made a lot of mistakes. Not preparing enough for a product that is grossly underestimating how much work we'd have to do when this product go live. I know some of my team members are probably here, so they're like, yep, just remind me if I'm making that mistake again, guys. So those are the mistakes I think that we've made that we could have done much better if given like if we do.
Okay. Cool. So no, John, I think you talk about especially the hiring piece. I think that is not something that resonates with probably every founder that is on this call or listening or will eventually listen to this video. John, let's look at the success across the continent. Recently, there's a Paystack acquisition of $200 million by Stripe. There's a question here from Stephen Dang. What does the Paystack acquisition do for fintech in Africa and for African startups more generally?
Right. So if you look at the way startups are structured, right, startups are things that are meant to grow really fast. And the only type of money in the world that will fund things that grow really fast is venture capital. In fact, that's the reason why the whole field was set up to finance those kind of short projects. The concern with Africa, and Benji, you know this, like in San Francisco, you could be working on like a calendar app, and next week, Google acquires you because you're a very important feature on Google Calendar, and now you're like, you make a lot of money.
Right.
So, but in Africa, the context is not the same, right? Like, in fact, situations where like 3 years or 2 years, you become way bigger than even people that could have bought you.
Right.
So what you saw with the Paystack acquisition is saying there's an international play to this, right? There are international guys that are coming to Africa that don't want to do the tough work that you and I are doing right now, Benji, which is like, knocking door to door to get infrastructure or to get like, regulatory approval, etc. So there's companies that figure that out, and international companies are just going to come and say which company looks the most like my brand, which company looks the most like, will I have to do the least amount of work to make happen? And they just buy them. So the Paystack one was the first obvious one, right? So you're probably going to see another one from like an Amazon, like another one from like, so it's good for us because that means investors also read that signal and they know that money can come back. Right. Because that's always been the concern, like, will I make my money back? So they now know that money can come back because like, to some extent. And that's another, route that you probably see another more companies take. As companies get bigger, we've had like one successful IPO already to some extent, Jumia. So you're seeing like, I think Jumia probably had also like a very huge impact on the ecosystem. So there's like two ways, like you can actually, build and go all the way to like New York, or you can get bought by Silicon Valley startup.
We have a question in the audience from Daniel. And Daniel is asking about how is Wallets Africa handling competition like Brass, which also serves businesses?
I think Brass, I've met Shola, I think once. I think he's also a smart guy. I think they're doing well. We don't even wake up every day to think of competitors because, businesses are so tough to like solve problems for. So we just solve problems for you, Daniel.
Right.
It's like I have a relationship with Daniel. So how do I keep Daniel a happy customer for a while, instead of forever, as much as I can.
Right.
Instead. So that's how we think about competition. We just focus on our users.
Yeah. And by the way, a lot of Y-Combinator companies are customers of John in Nigeria as well. And so that's also been pretty cool. John, YC. A lot of people really want to get into YC. Africa has one of the largest applicants to YC every single year. What's your advice for people looking to apply or get into Y-Combinator? Is Y-Combinator the golden ticket? Is it the only way to be successful in startup world in Africa? Are there other ways around it? What's your take?
Yes, so I don't think founders should even think of YC when starting out. I think you just obsess on your customers. That YC is forced to extend an invitation to you to apply. Like, hey, you're doing so well, you're killing it, dude. Why are you not applying to us? Take this link and apply. I think that's the level you want to get to as a founder. And I've seen so many like brilliant companies, brilliant founders. I think Stone with Evercent, then go to YC, Achu with Bitsica, there's Babs with Kuya. So like lots of these guys then go through YC and they're doing really, really amazing with their companies. So I don't think YC is the golden ticket. However, I think YC has one of the best founder network in the world. I think the exposure you get to like, all these really successful founders who have like to some extent, the Airbnb guys, the Stripe guys, the exposure you get to them kind of gives you some sort of confidence because they share their mistakes and every mistake you've made or every mistake you're about to make, they have made it all. So they're like, telling you, oh, okay, you're fine. That's just a mistake. You're fine. So that's their advantage. Also, there are not many incubators in the world that provide as much access to capital as Y-Combinator does. Yeah, it's a really good deal. Then the partners are really brilliant. Like, there's Tim Brady, co-founder of Yahoo, there's Michael Silver, there's like all these really, really smart guys that you'll be working with at YC. So that really helps.
So John's summary there is focus on your business, focus on your customers, and focus on executing. A personal example is I applied to Y-Combinator 6 times, and I got in my last time. So a lot of people see us as Nala, and oh yeah, whatever. But it does take discipline, focusing on customers, growing our business, getting some traction in there. Knowing that we know our customers better than anybody in the game is, I think, foundational and fundamental in order to be successful in that, regardless of YC or no YC. Okay, John, we have a couple more questions over here from the audience. Somebody's asking about Okay, regulation. And actually, let's do this telecoms question one. Are the telecoms your friends or not? Do they go out there and support you? Do you get funding from them? What does that look like?
Benji, you've probably been working with them more than I have. My relationship
Well,
with
let's
them has been very.
for Nigeria, let's talk about banks, right? So like obviously some of the banks might feel like you're taking their lunch, especially with the business to consumer product. Yeah, how's that been? What's the reaction there?
It depends on the bank, and it
Mm-hmm.
depends on the direction the bank is thinking banking is going.
Mm-hmm.
Because the fintechs are your customers, even commercial banks. Then when you get like international banks like Citibank, the commercial banks are their customers. So
Mm-hmm.
it's like there's always like people needing each other for like products and services. So
Mm-hmm.
banks in Nigeria, my experience with them, when people come into technology, they have different expectations. So it's always about managing those expectations. Not all of
Mm-hmm.
them are going to be friendly. Some of them are going to be like, oh, why are you coming after my customer? So you might need to explain to them that, oh, it's because I can actually bring more deposits as a collective to you than you
Mm-hmm.
spending all that money on all these individual customers. So that's my
Mm-hmm.
experience with them so far. We have been very lucky to work with like the most brilliant minds in banking in Nigeria. We have been very
Mm-hmm.
lucky to have a sit down with them. We've brought some of them over to the office, when we need to, and that's something that I think success in the ecosystem has shown. Like as I said, in
Mm-hmm.
2016, you talk to a bank that you want APIs, or 2015, they're like, no, no, and that will never happen.
Right.
Right?
Right.
So
Right. Exactly.
now, like, yeah, but now in 2020, every bank is hiring like an engineering manager, every bank is hiring like a product manager, they're working on APIs so that people can like,
Mm-hmm.
use them stuff. Because so to some extent, success in the ecosystem has made it really, really, made the relationship smaller.
Just to piggy off that question, there's a question here from Guerra, all the way from Toronto, who's tuning in.
Hey, man.
What do some of the regulatory compliance challenges faced by solutions that inter-Africa cross-border money movement? So like, how about let's adjust that a little bit to the regulation and compliance challenges you may have faced in Nigeria, and how that looks like there. Given Nigeria has such a large fintech ecosystem, do you think that it's evolved, it's become easier? I know you've probably had some difficult conversations as well. Can you talk a little bit more about that?
Yeah, thanks, Benji. So if you want to do cross-border in Nigeria today, like you want to move money between borders, you need an international money transfer operator license.
Mm-hmm.
So one way to get it done is to probably like look for someone that already has and piggyback off of them. For us, one of our shareholders has, so we just piggybacked off of them. Then we bought
Mm-hmm.
like a banking license, like support that. So that way we are able to like move money here and there.
Did you
Um,
hear how John just plugged that in? We got a banking license. Y'all hear that? Y'all, when I told you John has just been executing and building and building, that's what I mean. All right, go ahead, John. Uh-huh.
right. So thanks, Benji. Then so that's one way to go about it. The second way to go about it is to do something really smart, like someone like Timmy is doing, like just build it around crypto.
Mm-hmm.
I think Michael is also doing this with Pusha. Then the next, I think something I'd pay attention to, and why it looks so difficult to cross border in Nigeria, is fraud.
Mm-hmm.
You just want to like figure that out from day one on like cross border.
Right,
Where are all these
right.
people, where all this money coming from? Then like worry about like politically exposed people, terrorists, etc. So having a strong anti-money laundering kit might to some extent like
Mm-hmm.
solve some of these problems.
Mm-hmm.
Yeah, so like just like putting in place like a strong AML or counter terrorism and like fraud detection like pipeline, that would really help.
Ladies and gentlemen, this is John from Wallets Africa. John, thank you so much for joining us today. I'm going to hand over.